Good morning from Chicago traders. Sorry about the delayed start here for episode number 2065 today. It is 8:03 a.m. Chicago time on Thursday, the 2nd of September 2021. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, as we look at the market overall positioning, pre-open, we see that crude is leading the pack up 1.28%, 1.3%, basically flirting with the $70 mark. Crude is recovering from the dip we've had over the last couple of days. Overall market posture is, again, mild risk on. We see that the indices are slightly higher. The Russell, again, leading the pack on the open. With interestingly also flows into the Treasury futures, including the European Eurobond, the German Eurobond. We're seeing positive currencies as well, except for the Japanese yen. Bitcoin broke through the 50,000 mark again, and Ether had a breakout day yesterday. We're seeing that here. Ether's been hanging out around 31 to 3,300, now at 3,800. The S&P has a multi-distribution profile this morning, 133,000 contracts traded. The overnight inventory is flat, is balanced, with 19 and a half points of range. The point of control of 45.30, which was an early resistance yesterday in yesterday's session, 45.30. In terms of pre-market announcements, Patterson, Signet, Hormel, and American Eagle. One of the bigger ones after the market is HP announcing today. Broadcom's also a significant tech stock, and Science Applications. The main focus for the market right now, as far as I can tell, just scanning the Wall Street Journal, Reuters, AP, and other news outlets, is U.S. unemployment coming in tomorrow at 8:30 Eastern. Pretty significant release tomorrow. We see markets across the board in a holding pattern. We see this in crude, despite the hurricane. It's trading in a wide range. Gold has overlapping value. The 30-year and the 10-year have been overall trending down, but holding sideways as well. So overall, I agree with the idea that the market is in a holding pattern as we see what takes place tomorrow. All the buys yesterday were met with selling, and any dips were bought. So we are sideways. Today we have factory orders at 10, natural gas 10:30. And a few Treasury auctions, total vehicle sales at 8 p.m. And there's the Caixin Services PMI at 9:45 this evening. That's a significant number for China. So that's what is on deck. That's a summary of what we are looking out for today. Here's what was expected pre-market yesterday in our review segment here. The expectation is that we would likely dip down into the 45. From where we were likely to dip down into the 45.25 area, find support for a push into 28 again. Break through the 34.50 right here, 34.50, and if we break through the 34.50, I expect that to become support, and I expect us to make a run for 47. We pretty much did everything up to this point here. The secondary is a push into 34.50, 35, sell off and break towards the gap zone at 45.10. Neither one of these plans worked out as expected. Here's what we've got. Let's look at our review segment. There's a lot on here. There's a lot on here, a lot of lines and stuff, but overall, if we look at the price action, we see that in general we didn't really accomplish very much. We did push the all-time high, but we did so with two ticks. The all-time high was put in on Monday. And at 34.50, and yesterday we managed to get through the 34.50, and we pushed to 35 even before falling back into range. So most of yesterday's action occurred within this kind of area here. And so this remains in play here. The overnight session didn't do much either. The overnight session pushed the low at 45.16. If you remember, the 45.16.50 was the high put in right before the rally on Monday. So this is the 16.50 right here, 16.50. And we held it somewhat here and here. And then the overnight session is basically holding that same price. I'm expecting a pretty choppy and sideways trade again. We've been coiling for a couple days now after rallying for 2 days in a row. Again, Monday was not expected to be a rally day. We ended up taking all of it back on Tuesday. We ended up sitting sideways on Wednesday, and that's where we are. You can see the delta day in, day out is pretty flat. Lots of selling on Mondays off of Monday's high. The new all-time high was sold pretty strong. But since then, look at that delta. It's just completely sideways. Nothing really stands out in terms of rotations or anything like that. Let's take a look at the overnight session and what we've done since. We opened up in what was a pretty flat pattern here on the Asian session. As soon as the Asian session opened, we sold off, formed another box, broke out to the upside, and formed another box up here, only to break out to the upside. And now we're challenging yesterday's high at 35, and not sure what to expect here with the new overnight high at 35.50. Remember, the Globex high is 42.25 right here, 42.25. Lower high yesterday at 40. Lower high at 45.40, and now a lower high at 35.50. We'll see where that takes us. This rally into the open today throws a bit of a wrench in things. I wanted to see if we would hold sideways with a lower high and return to challenge the lower end of the distribution. 45.28 again plays a pivotal role here. Remember, the 28 comes from this multi-top on Tuesday, or was it? Yeah, it's on Tuesday. It's a multi-top, comes from the multi-top on Tuesday, and now yesterday became the point of control. And then today is the low volume node, also the LIS, or the line in the sand, in terms of directional bias. So this is what we're setting up for. A little bit of a murky day today, in my opinion. Let's dive right into what's expected for today. I don't have much more to add. There was a lot that was covered yesterday. I gave, I don't know if I'd call it a trade wisdom or something, but I talked a lot about why we do this, why we follow this process yesterday. You might want to play back yesterday's Trader Bite to catch up on that, and also talked about the fact that I don't pretend to be right. The goal is not to be right. The goal is to have a plan and to follow the plan and let the edge play out on its own, right, over time. So what are we looking at for today? Today, we have the line in the sand right here at 28. 28. We have settlement down below. The settlement price in the S&P is 45.21 and a quarter. We have a Globex high at 40, Globex high at 42.25, and we have measured move targets at 45, 44.50, and 47.50. We still are playing around with the 16 stock zone. We're still playing around with the 20 stock zone, and we still have the 25 stock zone. These are all areas that are significant structures, 20, 25, right up here. So as we open today, I'm looking for a minor pullback consolidation as we are in the upper distribution of yesterday's profile. I'm looking for a minor pullback, and then I'm looking for an impulse or push higher to squeeze the 35 and start pushing for that 40 before consolidating and then holding sideways for the rest of the session in preparation for the non-farm payrolls. Okay, taking a directional trade on a long-term basis right before the unemployment number is a risk that is not likely to be to have a significant offsetting reward. So to me, you challenge the expectation is that the traders would challenge the structure, but overall we were not likely to see a directional move. The secondary is an open auction that pushes higher, finds sellers again the same way we did yesterday. Right here, yesterday we pushed through the 34.50 and immediately found sellers right back to new lows on the session. Same thing this morning, looking for sellers to come back in, squeeze us down into 45.30, which is the overnight point of control, to the 28, and then hold sideways. In either case, I'm looking for a higher high, higher low into today. Possible, most likely a double distribution profile by the time we get done with today. Again, tomorrow we have non-farm payrolls at 8:30 Eastern, and that's a significant contributor to Fed policy. Dual mandate is what the Fed has. It has an employment as well as an inflation mandate. So this is the other piece of the puzzle that the Fed needs to worry about. We very often come in anticipating a decent non-farm payroll. We had one in August. If you go back to August 6th, you'll see that we actually drove higher from the non-farm payroll to new all-time highs. We'll see if that happens tomorrow. Okay, we'll keep it short and sweet today. Good luck, and I'll catch you tomorrow morning. Take care.